It was a day of shock and awe on Wall Street. President Trump, in a move that surprised even his closest advisors, slapped a hefty 25% tariff on goods from Canada and Mexico. China wasn't spared either, getting hit with an additional 10% tariff on top of existing ones. The markets, as you might expect, freaked out. The Dow Jones, the S&P 500, and the Nasdaq all took a nosedive, with investors scrambling for cover like startled pigeons. This wasn't some small-ball political maneuvering. This was a full-blown tariff tsunami, and the waves were already crashing down on the global economy. The immediate impact was clear. American consumers were about to get hit with higher prices on everything from avocados to auto parts. And businesses, caught in the crossfire, were left wondering how to navigate this new landscape of uncertainty. The White House, however, remained defiant. Trump, in his signature style, brushed aside concerns about economic fallout. He argued that these tariffs were necessary to protect American jobs and reduce the trade deficit. But critics were quick to point out that tariffs are essentially taxes on American consumers, and that this move could spark a global trade war. North of the border, the reaction was swift and furious. Prime Minister Justin Trudeau, normally known for his diplomatic demeanor, didn't mince words. He called the tariffs unjustified and vowed to retaliate with equal force. Canada, after all, is America's closest trading partner, and they weren't about to take this lying down. Mexico, too, was up in arms. President Andrés Manuel López Obrador, while emphasizing the need for continued dialogue, made it clear that Mexico would not be bullied. He promised a measured but firm response, targeting American goods with retaliatory tariffs of their own. The message was clear. This wasn't just about economics, it was about national pride. The normally sleepy world of trade negotiations had suddenly become a high-stakes game of chicken. Both Canada and Mexico announced plans to target specific American products, hoping to inflict maximum political pain. Whispers of boycotts and canceled contracts filled the air. The Trump administration, it seemed, had badly miscalculated. Across the Pacific, China was watching with a mixture of amusement and anger. They'd been down this road before with Trump, and they knew how the game was played. The Chinese government, through its various mouthpieces, accused the U.S. of bullying and protectionism. They vowed to retaliate, hinting at tariffs on American agricultural products, a move that would directly hit Trump's base. The trade war that had been simmering between the two economic giants was now threatening to boil over. China, with its vast manufacturing capacity and growing consumer market, was a formidable adversary. They'd already shown a willingness to play hardball, slapping tariffs on American soybeans and pork in previous rounds of this trade spat. The stakes were incredibly high. A full-blown trade war between the US and China would have devastating consequences for the global economy. It would disrupt supply chains, increase prices for consumers, and could even lead to a slowdown in global growth. The world watched nervously as the trade war drums beat louder. The post-World War II system of global trade, carefully constructed over decades, was teetering on the brink. The rules-based order, already under strain from rising nationalism and protectionist impulses, was being tested like never before. The consequences of a trade war were too dire to contemplate. It wasn't just about tariffs and trade deficits, it was about the very fabric of the global economy. A world divided by trade barriers would be a poorer, more unstable place. The hope was that cooler heads would prevail, that diplomacy and dialogue would win the day. But with every passing day, that hope seemed to be fading. The world was holding its breath, bracing for the worst.